So it's great if if you had deeper pockets, maybe you could say, well, I planned better. But you see, to me, we've talked about these kinds of things, but I invited back Professor Peter Mathews because on a day like today, when we have all three things converging, you've got the jobs report coming out, you've got the latest on the market hitting 15,000, and then, of course, you have the budget surplus. Man, there are people who are either very happy and others who are very confused saying, gee, why am I not feeling it? Peter Mathews, more than 3 decades as a college and university professor, our guest commentator and regular contributor here, political science, Cypress College, and we've worked often on many, many different media networks. Professor, thank you for coming back.
Great to be here again, Dave.
All right, so on this Friday, as all these things are converging, just like the fires above Malibu or over here in the Ventura County area, is this sustainable when you look at it? You know, we got 165,000 jobs, but I've been looking at the kinds of jobs, Peter, and then we look at the market being propped up by the reserve. Should we just be thankful and, just keep on whistling down the street here?
No, Dave, we got to look at the details. We got a tale of two cities, my friend. The best of all the times and the worst of times for who you are.
I love that. I love that approach.
That's what's going on, like Charles Dickens said. And what we have here is stock market guys doing really great with the market going up to over it's a record high, 1,500 points. And yet you got people who are silently suffering in America. People who are part-time workers who want to work full-time but can't, are not offered the jobs. Those who stop looking for work.
Amen to that.
This is just not right. So really, it's kind of a show you got to look behind the scenes on. Dave.
Peter, I'm glad you mentioned the tale of two cities because just yesterday I was looking into the story of how many of the large companies, the big employers with 500 or more employees, have started to pare back their part-time force to keep them under that 27-hour point so that they don't get benefits, they don't get health care, and instead they have to go on Medicaid or some other kind of government subsidy just to be able to get health care. So if Wall Street is celebrating that kind of an America, then don't invite me to the party.
That's right, because it's not our party, and this is exactly what's happening, making the situation even worse for those who want to work. Now, there's a lot of other things going on, too. If you remember, there's also an underground economy going on. About $2 trillion is estimated is underground now. People have lost good jobs, so out there doing garage sales, or doing flea market jobs, selling used clothes, and they're making some money, but they're not paying taxes. So
Peter, I want to jump in on that, and then I want you to continue your thought, and that is, I know a lot of friends now who are basically, as you point out, they're even afraid to put money into their bank account because I think now the mandatory reporting level has dropped to like 4,000, as I recall. Whatever the case, they're saying, you know what, I'm doing it in cash, I'm keeping money under my mattress because I simply don't want to report this to the tax man. How does that have implications long-term for America?
Big time, because those are folks taking out of the regular economy, their demand or the taxes are not coming in from them, which would, and they really can't afford to do that because they're making so little with those kinds of jobs, Dave. They can't afford to pay for their bills fully, even with the underground economy work, So how will they pay taxes? That's why we're losing about $500 billion in taxes. Whereas if we would just get a small business administration to open up its loans, Dave. Let me tell you something. It's so hard to get an SBA loan or even a micro loan. You got to put up your house for collateral. My friend, let me tell my friend Frank, he had a tooth whitening business recently, Dave, and he wanted some money to print flyers and get the publicity out. He bought a machine. He was using it at his hair salon. He was making pretty decent money, but not really near enough to live on. He just needed a $10,000 micro loan. Couldn't get it because he's a renter. Doesn't have own a home. So we need to get the money to these small business people and the micro business that could get going, and also have some money as a CWPA for public works. We could hire the teachers back, the firefighters, the police officers like FDR did way back in the 30s. Days.
You know what bugs me? You know what bugs me about the Wall Street numbers, and it's this, Peter. Then I want to take some calls. My number 877-520-1150. It is that Wall Street seems to be content with accepting this new vision of America.
Yes. The tale of two cities.
Yeah. I mean, that's the new normal. I want to keep you past the break. You got a moment to stick with me?
Yeah, I got no problem.
All right, so here's my number, 877-520-1150. I'm biting into this thing, guys, because I think this is a story that really deserves at least a couple more minutes. Just tell me what it's doing to you. Are you among the people who are truly seeing the benefits of these huge numbers? Is your budget in a surplus too? Tell me if your budget is in a personal surplus. It's a couple of questions with similar things. Why don't we do this? Peter? I want to give people an opportunity to digest this and then maybe come back with me. Let's pick it up in the 6 o'clock hour because I've got Bobby Dean coming up right next, and I'm sorry to do that to you, Peter. But
no,
I want to
right.
make sure. But let's go ahead and pick it up. We're going to do a recap on the story again at 6, and perhaps you can join us then. Is that all right?
I'll be right there for you. Just give me a call.
Hey, Professor, I thank you very much. Peter Mathews, a good friend of the program and a regular contributor.
Your voice, KTLK AM 1150.
KTLK. So we've been speaking today in the earlier hour. We just ran out of time, but we wanted to have an opportunity to invite back Professor Peter Mathews, our political analyst and political scientist, really, and commentator. Peter, sorry to be so abrupt when I cut you off in the 4 o'clock hour, but this story is too big not to come back and do another segment.
Yes, it's really good to be back in, Dave.
Okay, so we were at the point where I was just asking you, when Wall Street can applaud the addition of 165,000 low-paying jobs, when the state of California is in glee over milking taxpayers out of $4.5 billion more than they expected and $200 million more from small businesses, how are we going to start creating jobs that are really worth something, Peter?
We've got to do it. It takes actually about 300,000 jobs a month to
300,000 a month.
Demand. That's what we need to get the economy rolling in the right way.
So Wall Street is applauding us doing a D on our performance?
That's what they're applauding, and they're making a lot of money. But Main Street, where small businesses are located, which employ two-thirds of our people, Main Street gets the shaft, and Wall Street gets the gold mine. That's what's going on.
Oh, I love that.
No, I'm not kidding you.
I thought normally when we find a shaft of gold, everybody parties. Oh, I'm sorry. I am the shaft. I mean, I am the one. I'm the gold mine who's getting the gold ripped away. Peter, hitting 15,000 is a milestone, but the Fed keeps feeding the economy, and now they're saying they're in that sweet spot where the Fed keeps pumping money in, and inflation still is not where they're going to increase the interest rate. Okay, what does that really mean? Maybe for the investor that's great, but Joe Worker out here,
right?
We still
what
have,
that means is that means is about $80 billion is what the Fed's been pumping into Wall Street, primarily the economy, which helps Wall Street. Mm-hmm. But the regular people who need to hire folks aren't getting the kind of direct loans with low interest they need to be able to create jobs, Dave. And in fact, we've lost jobs. We've had government jobs like teachers and firefighters and police officers. 11,000 were cut back this month alone in those areas. And those are Main Street people. You don't have a strong middle class unless you have those folks with income in their hands to buy the products that the economy is making.
Well, I went on a rant in the hour at the 4 o'clock hour. People can go to KTLK AM1150.com and they can hear it, where I said that I don't like the idea when you talk to some people who live and die by grants, who are, they're crying in their own beer suds because grants dried up. By golly, get off your ass and go out there into the real world and go find me some job opportunities and get some of these companies to ante up. I mean, here's what I'm seeing, Peter. Mm-hmm. We don't have the innovation going on that I've seen before. In the 90s, we saw some of this. The private-public partnerships aren't happening. Is that because the private side is still anemic, or they're simply becoming more stingy, if you will?
I think they're becoming more stingy, and they're influencing the government to be stingy in terms of investment in a public-private partnership. Look at in Germany, for example. They have innovative products with a private-public partnership. The government pumps money into solar research, and they give small businesses a feed-in tariff to be able to produce solar power and make money off of it and buy the solar set. So we could go to new products like that right here, Dave, if we would have that public-private partnership, especially focusing on small and medium businesses.
Peter, you mentioned Germany. I'm glad you did, because I was reading recently how 90% of their jobs in manufacturing have stayed. They have stayed. They haven't disappeared.
Yes.
Now, we gave away the jobs, and we also gave away our factories. The gear got taken out. We shipped that out.
That's right, because of free trade, not fair trade. The Germans insist on fair trade, and they export more than they import. We do the opposite, because we give away our factories to other countries and give tax breaks to big companies to take the factories and set up jobs, middle-class jobs that we had here, take them to China and Indonesia
Okay.
and get tax breaks for it. That's a real problem. That's why Germany is doing better overall as a model for an export economy, that we need to learn a bit about that and get back to what we used to do. We were the number one exporter in the world just about 40, 50 years ago.
Let me get your take on something else. President Barack Obama finishing his trip in Mexico, headed down to Costa Rica, but when he was in Mexico talking with Enrique Peña Nieto, the Mexican president, I think in a way Peña Nieto gave him a very strong message that Mexico is now beginning to devise a new strategy where they're looking at their future without necessarily hinging that on the U.S., and they talk about how they're going to re-strategize, trying to create jobs in Mexico and becoming more independent. Here's my point. A lot of the exporting you talked about has been going into Mexico. I hear now the Mexicans saying, wait a second, it hasn't been fair trade from our standpoint.
Yeah.
How could that have an impact on our economy if Mexico starts to put up some new kinds of requirements for trade? What do you think?
That'll actually reduce even the exports that we do have going to Mexico. It'll hurt our middle class here, and I think it's a sad situation that we've more or less encouraged. In fact, the president made it that he has to do that, the president of Mexico, because his folks are suffering also in the middle class there. That's disappearing. So we've got to go back to fair trade and get other countries to open up their markets, and also be fair about letting new products come in here and creating new ones here.
Well, I've got another spin for you, Professor Mathews. Peter Mathews, professor of political science, Cypress College. Here's my take. A collaborative approach. The U.S. and Mexico, they've got labor, we've got technology. Working together, we would be a strong force against the Chinas and the Indias of the world, not necessarily in a bad way, but in a defensive posture, moving into an offensive way of looking at the world. Don't you think we could create so much more if we could be more collaborative?
That is how it has to be. In fact, that's how the European Union worked out. The European community years ago, they collaborated among themselves. The richer and poorer countries came together, and they did joint partnerships.
Yeah, but some of them had parties late into Saturdays, and they spent a lot of their money like the Greeks.
Well, that's true. That was in Southern Europe, but they spent more than they were taking in, and the banking crisis here infected them, too. That was part of the European crisis problem. But initially, the European community for 40 years did well throughout Europe.
Really?
As a collaborative approach, like you're suggesting, that Mexico and the U.S. too. I think it's a great idea, Dave. One more thing, Dave, about the middle class. Most theorists, starting back with Aristotle, Thomas Jefferson, Robert Dahl, said if we don't have a strong middle class in any country, especially this country, you won't have a democracy. It won't prosper. Democracy won't prosper. So I say the collapse of the middle class will be the collapse of America. And what's good for the middle class is good for America. That's how we should be looking at this.
Peter Mathews, thank you so much. Have a terrific, terrific weekend, and I do appreciate your insights and joining us. You're welcome back anytime, sir.
Absolutely. Thank you, Dave. Have a good
Peter
weekend.
Mathews, political science professor, Cypress College, also a regular commentator on many a network, and we're happy to have him here.